Good morning, it's Thursday the 27th of January. I'm Tom Elliott, this is my market report. Shares have been calm today after a light night on Wall Street last night. Shares there were up very marginally. The US market doesn't know what to think of Barack Obama's State of the Union speech. He has called for a cut in corporate taxation, which normally you'd think was good for companies and therefore good for share prices. But people can't quite work this in with his desire to get the US budget deficit down in the near future. Ronald Reagan tried a similar thing in the 1980s, and he was accused by the then George Bush, father of George W. Bush, of practicing what he called voodoo economics. Well, it seems that voodoo economics are certainly back on the agenda in America. In the local market, Downer EDI shares are down a whopping 20%. They've had, I think it's their 6th or 7th profit downgrade in a row. The management of this company has no credibility. They've got a train contract with the New South Wales government. It's causing them all sorts of problems. Anyway, the share price down massively. I think some heads are going to roll at the executive and the board level. Foster shares rose strongly the day before yesterday, before Australia Day. There was an article in the Fairfax newspapers, that is the Sydney Morning Herald and the Age, by Del Ferguson, saying that SAB Miller had cleared a few legal hurdles that might have prevented it from making a bid for Foster's. Now, SAB Miller is one of the world's largest global brewers. It itself is the product of a merger between South African breweries, that's the SAB, and Miller, which is a famous name in American brewing. And many people now think that SAB Miller will have a crack at Foster's fairly soon. And on top of that, the Foster's board is shortly going to formally announce the demerger process, which has been talking about for about a year and a half now, I think. And that's to separate the wine and the beer business, effectively to undo the original Southcorp takeover, which has caused Foster's a lot of problems in the last few years. Now, a takeover is what Foster's needs, either from a financial perspective, even though from a national interest perspective, some people might say it's a bad thing, because the cool weather plus the floods here in Australia, meaning that less beer is being drunk this summer, and secondly, the very strong Australian dollar, which as we speak is trading almost exactly at $1 each, so at parity. Of course, that's affecting their overseas wine business. So if it wasn't for the takeover rumours, Foster's share price would be considerably lower than where it is, and right now it's about $5.75 a share. It has traded up as high as $6.30 a share in recent months, again primarily on takeover speculation. Resource stocks are stronger because on the London Metals Exchange overnight, the prices of most metal commodities were stronger, therefore Rio and BHP are up. Coal stocks like MacArthur Coal and Gloucester are also stronger. They're all saying that they'll be able to resume full production in 2 to 3 months, which seems amazing. I've seen some pictures of some of these flooded coal mines, and I mean, some of the big cranes, only just the top of them is above the level of the water. That's how deep it is. But they've got these amazing pumps, they'll pump it out, and once it's pumped out, they will be able to resume coal shipments. That's good for those companies' share prices. So overall, a bit of a mixed bag on the stock market today. Banks mixed, Downer EDI down 20%. Retail stocks mixed. The flood levy means people don't know what's going to happen with consumer spending. My tip is that with rates probably going up and the flood levy, consumer spending is going down. That's not good for retail stocks. Look forward to your company again same time next week.